What's going on, guys? MMuniz here. Welcome back to the channel. In today's video, we're going to discuss the popular income ETF, QYLD or QYLD, and there's kind of a lot of stuff happening lately. We've got some popular YouTubers announcing they sold all their shares. We've got inflation through the roof. Interest rates continue to rise on a monthly basis. No end in sight. When is the Fed going to U-turn? When will the Fed pivot? We don't have any answers. So this video is going to talk about, is now the time to sell QYLD? Is it going to go to zero? Now, before we do anything, I do need to disclose that I'm not a financial advisor. These are just my opinions. I do own QYLD. I have about 500 shares or a little bit more. So you may think that I'm biased. That could be the case, but it's up to you guys to do your own research and figure out what's best for you and your family when it comes to your financial future. So we need to try to figure out, is it really the time to sell? Well, to do that, we need to figure out the answer to a couple questions. The first question is going to be, are you selling or are we selling because QYLD's at its all-time low? QYLD's down 30% year to date, or just about 30%, and it's at the lowest point in its history. Should I sell? Should I sell at the bottom? Because it's only going to go lower. Well, the only thing we need to remember is the entire market is down right now. If you look at the index it follows, which is the NASDAQ 100, that's down 30% year to date as well, or just around there. But we aren't including the fact that we were actually paid distributions. We get around 1% a month of our total investment. So yes, the market is crashing, but technically with the falling market, QYLD is outperforming. Now, it's not always going to be the case, but currently that's where we stand, and that's typically what happens in a downward market. QYLD will fall with the index, but you're still going to continue to collect option premiums. But now the next question comes into play. Are we selling for other opportunities? Now, I like this question because, honestly, I personally believe that there are better opportunities for certain people right now. Now, what does that mean, though? Because at the end of the day, when you are saying, I'm selling because there's better opportunities, that means you're timing the market. And we know that time in the market typically outperforms timing in the market. So we may think that we're near the bottom now and that there's a ton of opportunity to sell QYLD and immediately invest into something that is going to allow us capital appreciation and in a bull market is going to outperform QYLD substantially. So if we were to take all of our money and put it actually just into the index, then we'd probably make a lot more money. But that only would happen if the market just skyrockets today or tomorrow. We don't know if that's going to happen or not. If you personally believe that that's the case, then maybe that's a good option for you. But at the end of the day, thinking that there are better opportunities right now is still going to be time in the market. Now let's quickly just discuss a couple theoretical options. So if the market continues to go down an extra 30% over the next year or 2 years, that whole time you'd still be collecting premiums from your QYLD investment. Whereas if you just have the index, you're going to be just getting the dividends from the companies that you're holding, and if it's the NASDAQ, you're not going to be getting much. Still an option, but just keep that in mind. If we have a flat market for the next couple years because the Feds aren't raising rates, they're not lowering rates, and there's kind of a lot of uncertainty, and we're just getting volatility up and down on a monthly basis, but at the end of the day, not much actual price movement, you're going to be doing really well holding QYLD. Because we know in a flat but volatile market where throughout the month there's price movements, but at the end of the day, as long as we never cross that strike price for that option, we're going to make money with QYLD and we're going to do well. But that's a lot of what ifs, because then the third option is if the market goes up, then we're going to underperform. There are people that say QYLD is going to continue going down. It's never going to go up in price. That's just ridiculous. We know throughout history that QYLD does go up, it does go down more, and it does produce lower highs, but it depends on the market that we're in. Looking at the history of QYLD since its inception when it opened at $25 a share, right in the beginning, back in 2014, we were at $26 a share, and then within a year and a half, we were all the way down to $20 a share. So we lost 25% of our value, and then we climbed all the way back up to $25. So we're back to where we started pretty much. And that was the course of 2 years as well. So it went down for 2 years, and then it went up for 2 years. And we've seen massive drops right here, in 2018, where we went back down to 20 and then back up to 24. A perfect example would be the COVID crash of 2020, where we're at $24 a share, and then all the way down to a bottom of $18 a share. I think it actually went lower. I think it was in the 17s. But then we immediately climbed back by the end of the year up to 23.5. So yes, we have seen a decline over the past year and a half, but to say that it's going to be at 15 now, that's the new average price, and it's just going to stay there, that's just silly. It's not true. Depending on what happens in the market, QYLD will go up or down. Now, if you're truly interested in how the QYLD price works and how the options premiums work, I'm going to recommend a link in my description. It's for an Average Joe video. Average Joe is an excellent YouTuber. He's got some great content, and I love how he puts so much data into his content. He's also the person I referenced who sold all their QYLD. Now, I don't really agree with his decision, but at the end of the day, he does what's best for his family. I do what's best for mine, and hopefully we both end up being successful. But now we need to go to our next question, which is, does QYLD have a place in our portfolio? And if not, then maybe we should sell it. We know that if you need monthly income, then QYLD is going to be a good option. Historically, it has provided that 1% dividend payment on a monthly basis. There is a chance that this could go away. And one thing that we need to realize is as the NAV continues to decline, our dividend per share is going to decline as well. So people that invested in when it was $25 a share, they might be expecting to get a 20 to 25 cent per share dividend. However, it's going to be significantly lower than that because the fund's assets are worth less and the options premiums are worth less as well. But if you need to be paid on a monthly basis, then QYLD probably is a good option for you. I think there are other options that are just as good, if not better, or at least in addition to investing in QYLD for those people, such as just investing in the S&P 500 or the NASDAQ, or even just the Total World Stock Market Fund, VT. As long as you're taking advantage of your tax advantage accounts, at the end of the day, that's what matters. But QYLD might have a place in your portfolio if you're looking for that monthly paycheck. So now to the last question. Can QYLD actually go to zero? This is an interesting question. I don't know the answer, but I'm just going to give a little theory here. I don't think it's possible for a few reasons. QYLD is comprised of the NASDAQ 100 companies, and those companies have a value tied to them. So even though QYLD may continue to go down, at the end of the day, if it's still holding assets inside of its ETF, and those companies are still worth money, like Apple or Microsoft, then there's still going to be money there. As it goes down, the dividend will continue to go down, but the NAV sooner or later is going to almost like a diminishing return, where it's still going to go down 2 or 3% per day with the index if it's like a large crash, but that 2 or 3% of $10 is half of 2 or 3% of $20. So it's going to approach zero, but it's not actually going to get to zero. What might happen prior to that, though, is the fund could actually close out. The company could decide to no longer offer the fund. And that has happened in history. And your shares could expire worthless, or you might only get a very small amount back to you. So that could be a worst case scenario. Typically, the only ETFs that are going to go to zero specifically are going to be leveraged ETFs. So something like a triple inverse ETF of QQQ or something. So if we have QQQ go up 33% in a day, and you're holding the 3x leverage inverse ETF, well, you're losing 99% that day. Those type of funds are rebalanced daily. They use derivatives, and they can go to zero. It is possible. It's still pretty unlikely, but it is a possibility. QYLD is not the same as that. So now lastly, what is my personal opinion on what's going to happen? Obviously, I don't know, but my thought is we're going to continue to go down a little bit more, okay? My guess is hopefully less than 10% for the entire market. But after that, I think that the Fed is going to U-turn, and I think that they're going to start lowering rates, and that is going to cause a spark in stock market prices. As the prices go back up, some of the other funds will go up as well. I hope that it's not too fast because there's problems that will happen with QYLD if that happens, but I think that we're going to see an increase over time to bring us back to previous all-time highs. Not for QYLD, although it could happen. I just mean like stock market all-time highs or Apple or Microsoft, stuff like that. So in general, I think that inflation is going to be under control because we're seeing a lot of prices come down for commodities. Oil's come down significantly, copper, lumber, those kind of things. And I think that's going to be reflected over time throughout average daily consumer prices. And as that happens, then hopefully we can start making money again because I'm getting sick of seeing red. I want to know from you guys. Let me know in the comments down below. What did you think? Do you agree with me? Do you disagree? Do you think I'm an idiot for holding QYLD? Let me know. I will try my best to respond to every comment. And with that said, if you haven't already, make sure you smash the like button down below, subscribe to the channel. We do weekly videos on anything related to finance or fitness. And I hope you guys have a great week. See ya.